Hello. In continuation of the proceedings of our last meet, today to look into another problem under reconciliation of cost and financial accounts. Say this could be convinced with the help of an example. Say the problem reads as under. You first go through the problem. The financial account of a manufacturing concern year ended 31st March given. Debit side of profit and loss account, to material consumed 50,000, carriage inwards, then works expenses, direct wages, administration expenses, selling and distribution expenses, debenture interest, then buy sales 1,24,000 given, and net profit reflected at a figure of rupees 15,000. Now, this is about the profit and loss account specifically given in the problem, and net profit as per financial accounts stood at rupees 15,000. Now, net profit shown by the cost accounts for the year is rupees 16,270 given in the problem. You go through it. Now, further information given reads as under. Upon detailed comparison of the two sets of accounts, it was found that now A, the amount charged in cost accounts in respect of overheads charges were as follows. Now, say the reason for discrepancy given in the problem. Works overhead charges given in the problem as 11,500. Now, you go through or you ascertain in profit and loss account how much is the works expenses given. Works expenses given at rupees 12,000, whereas in cost records works overhead charges it stood at rupees 11,500. Now, 12,000 profit and loss account debited under the head works expenses, whereas for the same works expenses in cost sheet works overhead debited at rupees 11,500. Then definitely it is bound to be the first causative factor in bringing about either imbalance or disparity in between the profit shown by financial account and profit shown by cost account. Then next one, administration overhead given in the problem under cost sheet is rupees 4,590. Now, you compare in between profit and loss account and cost sheet. In profit and loss account, administration expenses stood at rupees 4,500, whereas in cost sheet, administration overhead stood at rupees 4,590. Say there is variation by a margin of rupees, definitely rupees 90. When there is variation by a margin of rupees 90, this is the second causative factor in bringing about imbalance in between profit as per financial account and profit as per cost sheet. Now, over. Then third one, selling expenses given in the cost sheet as rupees 2,640. Now, you make a comparison between the selling and distribution expenses. In fact, the usage of the word is concerned, it's a bit wrong, because we won't call it as expenses in cost sheet, we call it as your selling and distribution overhead. Selling and distribution overhead rupees 6,640 given in cost sheet, whereas selling and distribution expenses given in profit and loss account rupees 6,500. That is, variation is by a margin of rupees 140. Definitely, this is also another reason for discrepancy. Thereupon, next one, no charge has been made in cost accounts in respect of debenture interest. You go through profit and loss account. In profit and loss account, debenture interest is shown at rupees 1,000, no question of 100. It is given as rupees 1,000, whereas no charge has been made in cost sheet in respect of debenture interest. Definitely another reason for imbalance. This is the next reason for imbalance in between profit as per profit and loss account and profit as per cost accounts. Now, first you go through material consumed given in financial account, that is profit and loss account, as rupees 50,000, whereas in cost sheet no information pertaining to material consumed is given. It implies that profit and loss account is debited at rupees 50,000, whereas the same 50,000 is recovered in cost accounting or cost account. Say thus, definitely profit and loss account debited at rupees 50,000 for material consumed, whereas for the same material consumed, it implies that rupees 50,000 is also recovered in cost account or cost sheet. Definitely, it will in no way adversely affect in bringing about imbalance or disparity or discrepancy. Say thus, it should not be taken into consideration. Then, carriage inwards given in profit and loss account as rupees 34,000, whereas in cost accounts, no information pertaining to carriage inwards given. Definitely, it implies that carriage inwards, it is recovered at rupees same amount of rupees 34,000 in cost account also, and as such, no need to reconcile. Say, barring these two, in rest of the aspects, definitely there is discrepancy or variation in amount or in the figure given in the problem. Now, let us solve this problem. Now, you can either take net profit as per cost account as the base, or you can take net profit as per financial account as the base. You know, net profit as per financial account, if were to be taken as the base, we will end up with net profit as per cost accounts. Now, in the first instance, let us take into consideration profit as per cost accounts, and it stood at rupees 16,270. Now, net profit shown by cost accounts for the year is rupees 16,270, specifically given in the problem. Now, material consumed, no question of imbalance. Carriage inwards, same figure both in cost accounts as well as financial accounts, and no need to go in for reconciliation. Then, whereas works expenses, profit and loss account is debited at rupees 12,000, whereas works overhead charges recovered in cost accounting stood at rupees 11,500. Now, there is difference by a margin, or there is difference by magnitude of rupees, by a magnitude of rupees 500. When there is a difference by a magnitude of rupees 500, now which is our base? Our base is net profit as per cost accounts. Now, net profit as per cost account having been taken as the base, now you ascertain works overhead recovered in cost account 11,500, whereas works expenses debited in profit and loss account rupees 12,000. Now, when works overhead charges under recovered by a magnitude of rupees 500, definitely if cost accounts were to recover works overhead at rupees 12,000, then say it would have lessened the profit, in the sense profit as per cost accounts, it would have been shown a figure by a magnitude of rupees 500 less. So definitely in the absence of that, so when works overhead recovered at rupees 11,500, it implies that works overhead is under recovered by a magnitude of rupees 500. Say thus, when under recovered by a magnitude of rupees 500, it does mean to say that our profit as per cost account, it got inflated or it got increased by a magnitude of rupees 500. Therefore, when profit as per cost account is the base, we have to go in for deducting, or we have to make less, in the sense deduction in respect of under absorption of overhead. Thus, the first entry reads as less. You go through the solution. Less under absorption of works overhead rupees 500. Why 500? Because 12,000 works expenses debited in financial account, 11,500 recovered in cost accounts, thus 12,000 minus 11,500. Therefore, in the outer column it is written as rupees 500. Then next item, direct wages. Direct wages given in profit and loss account as rupees 1,000, whereas no information pertaining to direct wages recovered in cost sheet. It implies that, say, the direct wages debited in profit and loss account, the same amount is recovered in cost sheet also. Thus, no need to go in for reconciliation in respect of direct wages. Then third one, administration expenses. Administration expenses debited in profit and loss account at rupees 4,500, whereas the same administration expenses under the caption or under the heading administration overhead recovered at rupees 4,590. Say that is, the imbalance is by a magnitude of rupees 90. It says that administration overhead is over recovered in cost books by a magnitude of rupees 90. If it were to be recovered at rupees 90, then definitely, if it were to be recovered at 4,500 only, then our profit as per cost sheet, it would have been rupees 90 more. Definitely, when it has resulted in reduction or less profitability under cost accounts, definitely it must have to be added. Therefore, it is in the solution, it is written as over absorption of administration overhead rupees 90. Then next expense, selling and distribution expenses. Profit and loss account is debited at rupees 6,500, whereas selling and distribution overhead recovered in cost books as rupees 6,640. Selling and distribution overhead recovered in cost books 6,640, whereas selling and distribution expenses debited to profit and loss account 6,500. That is, the balancing figure is concerned rupees 140. Our cost account is over recovered by a magnitude of rupees 140. When it is over recovered, our cost records in cost accounts or cost records, when selling and distribution overhead is over recovered by a magnitude of rupees 140, definitely it has resulted in lessening the profit by a corresponding magnitude. Therefore, how to bring about parity or balance in between these two differing balances? For this purpose, rupees 140, it has to be added back to selling and distribution overhead, thus written as over absorption of selling and distribution overhead rupees 140. 140 being the difference between selling and distribution overhead recovered 6640 in cost books, whereas debited at rupees 6,500 in financial account. Thus, it has been added. Then next one, 2. Debenture interest debited in profit and loss account as rupees, it is debited at rupees 1,000. Now, in the additional information, no charge has been made in cost accounts in respect of debenture interest. If debenture interest were to be incorporated in cost sheet, then the profit as per cost accounts, it would have been lessened. It would have been lessened by a margin of rupees or by a magnitude of rupees 1,000. In the absence of any entry in cost sheet, automatically the profit as per cost account, it got deflated. It got inflated. When it got inflated, profit as per cost record got inflated. Therefore, when inflated profit, to bring it to par with profit as per cost, profit as per financial account, it has to be deducted. Thus, it is written as less debenture interest not shown in cost account rupees 1,000. Say thus, profit as per cost account 16,270, add over absorption of administration overhead 90, over absorption of selling and distribution overhead 140, thus totaling to rupees 16,500. 16,500. Then the items to be deducted under the caption, under absorption of works overhead 500, debenture interest not shown in cost records 1,000, totaling to 1,500. Now, accordingly, out of rupees 16,500, when 1,500 rupees having been deducted, the resultant figure would be rupees 15,000. What does it connote or what it represents? It represents profit as per financial account. Thus, profit as per financial account stood at rupees 15,000. Now, you go through the problem in profit and loss account to net profit. What amount of profit is given? the amount of profit given is rupees 15,000. Say thus, having prepared the reconciliation statement, the net profit as per financial account, accordingly it has been put at rupees 15,000. Say thus, this is the methodology. Thank you.